to another section of SEP online lectures, Supreme Success online lectures. My name is Adeton Oluwafemi, and I am taking the subject matter of financial accounting today. I would like that you should subscribe to this channel and you should like and share. God bless you as you do so. In our previous class section, we looked at subsidiary books as part of the books that we use in recording financial transactions. And in that section, we said that there are about 7 subsidiary books. Subsidiary books are defined as books in which transactions are firstly recorded before they are taken to the permanent book of account. And the information that are recorded in the subsidiary books are usually found in the source document. So in the previous class, we mentioned that we have the sales day book, which is used to record sales that are made on credit. We also have the purchases day book, which are used to record purchases of goods that are also made on credit. We also discuss return inward book, which are also books that are used to record goods that are returned from the buyer. And we of course discuss return outward book, which is a book that is used to record all the transactions or the goods that are returned back to the supplier. One thing that we note in that class is that all of these transactions, the sales day books, purchases day book, return inward and return outward, are all transactions that are based on credit basis. They are credit transactions, and that's why they enter into those books. And then we have 3 more books left that we will try to continue with in this section. The next book is what we know as the cash receipt day book. And after that, we have the cash payment day book, and the last book is the journal proper. But in this class section, we are going to be looking at the cash receipts day book and the cash payment day book, which, when it is joined together, will form the cash book. And so our topic today will be the cash book. As a way of definition, we said cash book are the books that are used to record transactions that are paid for immediately. These are books that are used to record transactions that are paid for immediately. It is a book that is used for recording the receipts and the payment of money, either in cash or through check. And these things are to be noted about a cash book. Number 1, it performs the function of receiving in money and paying out money in form of cash or check. The cash book is that book that is used to record the receipt of money and also the payment of money. The second thing we need to note about the cash book is that it fulfills the function of both a ledger and a subsidiary book, which means a cash book can function, it has a dual function of operating as a subsidiary book and also as a permanent book of account, which refers to as a ledger. And of course, we also need to note that this is a cash book and not a credit book. So it excludes all credit transactions. Any transaction that does not involve money or that payments for such transactions are not carried out, are not settled immediately, any transaction which payments are deferred to a later date are not included in the cash book. This is a cash book and not a credit book. Now, we also need to understand that from the cash book, we can extract a cash account and a bank account. From a singular cash book, we can bring out a cash account and, of course, a bank account. And we quickly look at these two accounts as we move on in our section. When we say cash account is the account that is used for recording money that are received and paid with or in cash. That is very important for us to note. The cash account are the account, the ledger that are used to record the receipts or the payments of cash. Cash. That's why we call it cash account. The receipt of money and the payment of money in cash. That is what the cash book is, the cash account is recording. And when we look at the cash account, we will notice that the balance in the cash account is usually referred to as cash in hand. It is referred to as cash in hand. Why? It is worthy to note that all cash that is received must be debited. Every cash that is received that will be entered or recorded in the cash book, once it is cash receipt, it must be debited. And of course, all cash payments must be credited. If it is a cash that is paid to someone in the cash account, it will be credited. And so we go to the bank account. Still from inside of the cash book, I said from the cash book we can have a cash account. We can also have a bank account. When we move on in our study today, we are going to be seeing how that is possible. But when we talk about the bank account, this is the account that is used for recording money that is deposited and withdrawn from the bank. Because especially these days that everybody is practicing cashless economy, where money are being transacted online. Okay, so transactions are being carried out where physical cash is not really involved, but people are still paying for their goods and for the services that are being rendered to them. Such a transaction is recorded in the bank account. It's worthy to note that the balance in the bank account is usually referred to as cash at bank. Cash at bank. It is also worthy to note that when a check is received, it is debited. And when a check is issued, it is credited. So, in contrast, if we put the cash account versus the bank account side by side, we can draw out the following differences. Number one, the cash account is used for recording money that is received in cash, while the bank account is used to record money that involves check. Number two, we can draw out the difference that a cash account, the balance in the cash account is referred to as cash in hand, while the balance in the bank account is referred to as cash at bank. And the similarities between these two accounts is that whether it is a cash account or a bank account, once it is received, it is debited, and once it is paid out or issued out, then it is credited. At this point, I would like us to look at types of cash book. Don't forget that we are discussing cash book as an example of a subsidiary book, putting the cash receipts day book and the cash payment day book together in one piece. So, what are the types of cash book that we have? We have number one, the single column cash book. Number two, we have the two column cash book. Number three, we have the three column cash book. And of course, we have the petty cash book. All of these examples we'll still be looking into in detail, but I'll quickly just talk briefly on each of them. When we say a single column cash book, we are referring to a cash book where there is no space for cash or for bank. All we have in the single column cash book is only a space for amount. Whether the transaction is carried out by cash or by check through the bank, the transaction will be recorded under the column of amount. The amount column is the column that will be used for both cash and bank. When we say the two-column cash book, the two-column cash book is a type of cash book where there is a separate column for cash and another separate column for bank. A separate column for cash and another separate column for bank. And that's why we call it the two-column cash book. So that each of these transactions relating to cash and relating to bank can be separated and seen at a glance as we look at the cash book. The third types of cash book that we have is what we call the three-column cash book. The three-column cash book. This cash book is known as three-column cash book because it has a space for cash, another space for bank, and of course, another space for discount. Okay? During the course of business transaction, there are discounts that are usually awarded either to the buyer or to the seller. And discounts are allowances in which buyers and sellers enjoy in the course of transacting business. And then we have what we call trade discount, we have quantity discount, and we have what we call cash discount. Of course, the cash book only records the cash discount while the others are recorded in the other subsidiary books, the sales day book, the purchases day book, the return inward, and of course the return outward. But the three-column cash book is called the three-column cash book because it has a column for cash, another column for bank, and of course a third column for the discount. And the last type of cash book that we have is what we call the petty cash book. Just like the name, petty. Okay, it's a cash book that is used to handle smaller kind of transactionary amounts which are too minute, too petty to enter into the main cash book. So we set up a petty cash book where we will put in charge of a petty cashier whom we will give a particular amount for every month, and it is usually operated on the impressed system, which is also known as the float system. Okay, so these are the types of cash book that we have. In all of these cash book, it is worthy for us to note that they all have two sides, the debit side and of course the credit side. The debit side is usually denoted by the letter DR, and the credit side is denoted by the letter CR. The debit side is usually on the left hand side, while the credit side is usually on the right hand side. Number two thing we need to note about this cash book is that receipts, everything that is received, every money that is received, whether cash or check, are usually recorded in the debit side, whereas payments are usually recorded in the credit side of the cash book. So right now, we will now take these types of cash book one after the other, and then we will look at them in details.